Hello and welcome back to the Geordie Pig Investor channel. Today we are going to look at, is BAE Systems PLC stock a buy right now? Well, let's start off with what is BAE Systems, ticker symbol BA. BAE Systems engaged in the provision of a full range of products and services for air, land and naval forces, advanced electronics, security, information technology and supportive services. And they operate through 5 major segments. BAE Systems is based in the United Kingdom. The industry that it's mainly part of is the aerospace and defence. It has a market cap of 38.5 billion. It went public in 1981, has over 90,000 employees, has a dividend growth streak very promising of 19 years currently, has a 5-year dividend growth also very promising at over 5%, and their dividend yield isn't too bad either, sitting at 2.44%. How's it performed over the last year? Well, they're actually up over 39% over the last 12 months, and you can see from the graph that from around December time last year, they have really pushed on over these last 8 or 9 months. BAE Systems earnings call and fundamental analysis. In 2023, they enhanced their track record of operational and financial performance by delivering against the business evolution targets that were laid out 3 years ago. There was a bit of a scare during COVID and weren't sure what the impacts would be like for them, but they seemed to impress over these last 3 years and delivered 20% sales growth, 80 basis points of margin expansion, over 100% cash conversion and 4.2 billion in shareholder returns, while simultaneously increasing their investment in the business. On top of this, they had orders of 38 billion, which surpassed the 2022 record, and the 2023 top line was 9%, surpassing the guidance expectations with all sectors. So very, very impressive over the last couple of years, especially since COVID. We've seen BAE Systems really come into their own, and we'll see that further when we come on to the next slide, which will show their current free cash flow and how that has grown over the last few years. But before we get on to that, let's have a look at the fundamental analysis. They currently have a positive free cash flow of 2 billion. They have an exceptional 3-year revenue growth rate at over 8%. They also have positive operating income at 2.4 billion, positive net income at 1.8 billion, and a very modest low debt to equity ratio of 0.54%. They have a high interest coverage of 16.7, very good short and long term solvency. They have an alright Altman Z score at 2.42% and a moderate interest coverage at 5.75%. And their only negative being a positive net debt of 1.9 billion, but something that isn't too concerning when they have such good fundamentals across the company and a very strong current free cash flow as well. What is free cash flow? Well, free cash flow is the amount of money a company has left over after it pays for all of its expenses and any investments it needs to keep the company running smoothly. Free cash flow has a massive impact on the direction a company may be heading. As we can see from the graph, it shows that BAE Systems had negative free cash flow back in 2014 and has since massively increased this up over the last 10 years as they now have close to 2 billion in free cash flow. We can see the steady progress that was made throughout the last 10 years, and we can really see over the last couple of years how strong BAE Systems has been. They've also heavily been investing into AI recently and other areas of business, which is why I believe the free cash flow is down from last year, but to still be at close to 2 billion is very healthy and not a concern at all. On top of this, we can see that their free cash flow payout ratio is at only 46%, so they have a real good amount of room there to increase their dividend payments year on year and also potentially buy back some shares. Considering they have increased their dividend payment for the last 19 years in a row, I don't see them not doing this anytime soon, and I believe that they will continue to try and increase that dividend payment at that healthy 5% rate that they have been achieving throughout the last 5 years. So after looking at BAE Systems free cash flow, we're now going to look at their discounted cash flow valuation, DCF method, which is going to have a look at the company based on projected future cash flow adjusted for the time value of money. A DCF valuation process calculates the present value of a company's forecasted cash flow based on a selected operating model. So just to remind you, BAE's current price is 1,339 GBX, also known as £13.39. And when I plugged in a discounted rate of 8.1% and a terminal growth rate of negative 2.7%, we can see that BAE Systems looks to be overvalued by about 20%. When I plugged in a discounted rate of 7.8% with a terminal growth of 0%, we can see that they are actually undervalued by 11%. And when I plugged in a 7.3% discounted rate with a plus 2.7% terminal growth, we can see that BAE Systems is massively undervalued at 48%. Alongside doing the DCF valuation, we like to do another one called relative valuation. This is a method used to value a company by comparing it to its other competitors based on certain metrics. The metrics it uses include EV to revenue, EV to EBITDA, which is earnings before interest, tax, depreciation and amortization, and it will also include PE ratios. We can see that from the methods that I use, I have found that BAE Systems is undervalued at 13% on the worst case scenario, being valued at 1,547 GBX. On the base case being valued at 1,779 GBX, also an undervaluation of 25%. And on the best case scenario being valued at 1,943 GBX, being undervalued by about 31%. Once I have worked out my relative valuation alongside my DCF valuation, I then come to something called the intrinsic value. The intrinsic value is a combination of the relative valuation with the DCF valuation. This method has been used for many years to calculate stocks and is one of the best ways I believe and have been using over the last year to value my stocks and potentially look to add or reduce size in certain positions. I'll also use one further method just to solidify my thought process, which I will get onto after this. The intrinsic value for BAE Systems after adding the two together was a worst case scenario of 1,311 GBX, average case being 1,640 GBX, and the best case being 2,263 GBX. The other method that I like to use is using the Wall Street estimates. I believe that the Wall Street estimates is a very good one to use because these numbers are forecasted by a company-specific analyst who provides research on that particular company and therefore comes up with what they believe is an accurate valuation. For companies the size of BAE Systems, there are going to be multiple analysts who are going through this on a daily basis and consistently looking through the numbers and what they believe is a fair valuation of this company. The worst case scenario that Wall Street estimates predict for the next year on BAE Systems price target was 1,191 GBX, which would be an 11% downside. They believe that the average case would be a 1,458 GBX, a 9% upside. And they believe the best case would be a 25% upside, being worth 1,680 GBX. So now I have all three valuations. What I can do is I can add the three valuations together and get my average, worst, base and best case scenario for BAE Systems. Again, a reminder that their current price is £13.39. We can see that the worst case scenario, they will be worth £12.71, an average case being worth £15.80, and a best case being worth £20.69. So if I was to use a 10% margin of safety on the worst case price, you'd be looking to buy BAE Systems at around £11.43. And if I was to use a 20% margin of safety on the worst case price, I'd be looking to buy BAE Systems at £10.17. The average case, which is the one that I usually favour the most, if I was to use a 10% margin of safety on this price, I'd be looking to buy it around about £14.22. And if I was to use a 20% margin of safety on the average case price, I'd be looking to buy it around about £12.64. Finally, we've got the best case scenario, and if I was to use a 10% margin of safety on this price, I'd be looking to buy at £17.99. And with a 20% margin of safety, I'd be looking to buy it around about £16.56. Well, what does this mean? So, the question that we all have waited for, is BAE Systems stock a buy right now? Personally, I think it's one of the most solid UK companies in the market right now. I can't get away from such strong fundamentals within the company and don't see them going anywhere anytime soon. They have great diversification within their own company, having 5 successful areas that have all showed very good growth over the last 3 years. Every single one actually growing over the last 3 years as well, which just backs up that within the company themselves, they've got really strong fundamentals and they're not looking just to only invest in one area, they're looking to invest in all 5. On top of this, they've got their amazing 19-year dividend growth streak, as well as their 5% 5-year CAGR, and only a 42% payout ratio. Just means that I believe that they are going to be able to consistently increase this dividend, and that's a company that I am looking to buy into for the long term. This is one of the companies that I already have in my current portfolio, and at the current buy price, we can see if we use the average case, it is a buy between 10 to 15% margin of safety. I'm going to be keeping a close eye on this stock, and if it drops to that 20% margin of safety on my average case price, which is £12.60, then I'm very likely to stock up quite heavily on my current position, as I believe at that price it is a no-brainer for me to really add to this position and build it in my portfolio. I hope you enjoyed today's video. Please let me know if you've got this stock in your current portfolio or if you're potentially looking to add it into your portfolio, and what other stocks you'd like to get a full breakdown on. Please like and subscribe. Thanks for watching. This is the Geordie Pig Investor, over and out.